A very warm welcome to the first virtual Motherson Investor Meet. To kick off today's conference, I am delighted to invite our Vice Chairman, Varman Sehgal, to welcome you.
Hello everyone. It is my pleasure to welcome you to Motherson's Virtual Investor Meeting 2020. My father and I would like to thank each and every one of you for joining us today. And while we would have normally enjoyed doing that in person, things are currently far from normal. So for the first time, we're inviting you to be a part of a virtual experience with us, and we hope that this will be both interesting and informative for you. 2020 is a year that none of us will forget as we continue to endure the effects of a global pandemic. However, for Motherson, it also represents the end of our fifth five-year plan and the beginning of our sixth business plan, Vision 2025. So through today and tomorrow, we are happy to share with you some exciting key insights and information on the next chapter of the Motherson story. We hope that you will enjoy this virtual meeting, and we look forward to interactive and fruitful discussions with all of you. Thank you.
Thank you, Varman, and a warm welcome to you all. I'm Esther Habel, Technology Strategy Director of Motherson Innovations, and it is my pleasure to be your host for the Investor Meet. Today, our Chairman and Vice Chairman will present the future outlook, our next five-year plan, Vision 2025, and our roadmap to achieve it. Following the presentations, we will end today's evening with an open house where you can ask your questions to the Chairman and Vice Chairman through the microphone button in your window, which is disabled until then. We will explain how this works before we start the interactive session. I would also like to invite you to explore our future exhibition, a virtual tech show highlighting industry trends and our technologies that respond to them. Finally, a short word on tomorrow. Following today's strategic outlook, our senior divisional leadership will provide you with insight on performance and future plans for their respective business areas. This will conclude with an interactive open house in the same style as today.
Thank you, Esther. Welcome everyone to the Motherson Investor Meet 2020. What a year it's been. But we are very excited with that you are all joining us for 2 days of great discussions about our new five-year plan. Tomorrow, our divisions will share their views on how they will help Motherson achieve the 2025 targets. Today, Varman and myself will share our views with you about the directions we have set for Motherson.
Yes, Papa, and we will cover 4 parts today, starting with our journey so far, Vision 2025, space to grow, and finally, funds for growth. This will be followed by a Q&A session, so there will be a lot of time for interaction, and we look very much forward to that.
We always talk about movies, isn't it? It's in our blood. We want to start by showing you a movie we made in which our top 25 people from all over the world give you a detailed look at 25 powerful principles that has helped us in the past and will help us to achieve the Vision 2025.
Yes, Papa. We'd actually planned to watch the film together with you on a giant screen and some popcorn. But since COVID has made this event online, we have divided the movie into 5 parts which are spread throughout our presentation today. The film will give you a great insight into our strategy, which we call the Motherson Chakra. We hope you will like it. So let's start with part 1.
Hello everyone. Motherson has just announced a very ambitious target for 2025 of 36 billion in the top line with a 40% ROS. We believe we have 25 very strong reasons why we will be able to achieve it. Let me show you how. So the 25 principles are coming from the Motherson Chakra. This is the Motherson Chakra. This is 40 years of our experience of trying to satisfy our most important person, which is our customer. It started with providing a solution, and then we used QCDDM SES to bring excellence into whatever we did. That allowed the customer's trust to grow on us. Once he has trust on us, he asked us to do more. And when he asked us to do more, it actually increased the content per car, per whatever we were doing. And as new products come in, you actually start the chakra all over again. So you go up on an upward increased cycle. I can tell you about the 25 principles, but I'd rather that you listen to our team, global team, to tell you about that. So let's go to chapter 1, solution provider.
I'm Kunal Malani. I look at the overall group strategy and mergers and acquisitions. We help the businesses drive their growth plans. We assist them in doing so. We help the group by raising capital as well. That's the reason why we are in Mumbai. This is my 7th year now. The biggest learning that I had is how do you drive a group as large and diverse as Motherson is. It looked as a huge task when you were thinking from it from outside, but as you went in, you realize we're all human beings, and at the end of the day, everyone is aiming for the same stuff, having a long-term perspective and focus. It means we look at long-term perspective in every decision that we take. We develop long-term relations with our customers. We reward long-term association with our associates. We attract long-term investors, and also we develop long-term sustainable models with the communities and societies we work with. We're wanting to build a business model which is going to last for many generations. For example, we buy our land and building. We are really aiming to run these facilities for many decades, and hence it's better to buy them rather than to pay rent on them and then have the risk of someone asking us to move out. Similarly, we buy the best of machineries. It provides a long-term model for that particular facility as the technology evolves and makes it relevant for many, many years going forward. As part of executing the long-term perspective, we've made the 5-year growth plans. We really do not talk about quarter on quarter. Our guidances are all driven by 5-on-5-year guidances, whereby we are actually thinking much beyond that. But from a public domain perspective, we do give our 5-year growth plans out. I'm looking forward at spending my service life here. I'm aiming to build an organization which is going to be there for the next generation, and you can't do this unless you're fully committed to it. We have a very nice 10-member team. They've come from a variety of different backgrounds. They are completely bought into Motherson. We've developed members which have moved in different parts of the group as well. So we're trying to build the leadership team and help them get their career aspirations met.
Absolutely right. Bang on.
I'm Ravinder Saini. I'm responsible for production engineering and quality assurance activities in wiring harness division of the company. Working at Motherson has always been fun. It is a learning organization. It is an open organization. There is no limit to growth. You can grow to any position if you have the capabilities and if you have the passion to grow. Following the customer essentially means meeting all the expectations of the customer. There's a beautiful saying in Japan which says, listen 1, understand 10. Our sole purpose of existence is to provide solutions to them. So it's naturally that we must understand what their problems are, what their needs are, so that we can prepare ourselves to fulfill those requirements. You need to read their body language. You need to listen carefully to what they are saying. This is part of the managerial training at Motherson, to be good listeners and good mind readers. Success of tomorrow is built on the actions which are taken today. Ahmed.
My name is Amit Bhakri. I am the Chief Operating Officer of Mate. Not betting on a particular technology, what that actually means is that we don't bet on a particular process or a particular know-how, or we are not trying to change the world. You see, OEMs spend billions of dollars in their research. For us, it's the best thing to do is sit with the leadership of OEMs and try and understand what could be their roadblocks to achieve their goals. And if we are latched on to that and we try and give them that solution or that path forward, most of our issues are kind of dealt with. And that's where we would like to focus on and walk down that path together with them. If you look at most of the investments that we put on ground, these are not married to a particular technology, whether the cars are autonomous or self-driven, whether the car is driven with a internal combustion engine or all electric or hybrid, it doesn't matter. It's never the goal. We've been trying to solve customers' problems, and that's how many opportunities have come up. Cars are not planned in 2 months, and that helps us define our next 5-year plan that way. We don't place bets, and we listen to the customer very carefully by trying to solve his problems and being a part of his growth.
My name is Andreas Häusler. I'm heading the Chairman's Office for Europe. I've started 15 years back in Motherson, taking care of Europe and Americas, but now I'm sharing that responsibility with Sukant, my colleague in Americas. We have an extremely high identification to the job we are doing, and that comes from working for a family. You're working for one family, you're working for one owner, and you know that will be like that as well in the 10, 15 years to come. Well, the principle being internally firm and externally humble. I think internally firm, first of all, means you need to first know what you want to do. If you go into a negotiation, Mr. Segel always told me, no, don't look what the others want. Don't even think about their arguments. That's not of relevance. Relevant is, what do you want? What do you think is the best for the company? Which bridge you can cross and which one you could not. That internal firmness you have to have. That is not only applicable for merger and acquisitions. It is in the end as well by leading the people, how you want to lead the people and what do you expect from them. You have to have that strong conviction, what fits to us and what doesn't fit to us. But at the same time, sometimes if people are extremely firm and they know exactly, it converts into a bit of an arrogant style. You have to be humble in a form in front of your negotiation partners, of all the partners you're dealing with, as well with your own associates, with your employees. And that's very simple for people like me who have been there from the start, because you know where you have started. You know that you had no coffee machine, you had no. So we are extremely grateful on that, because nobody wanted to be treated arrogant. At the same time, the customer, the partner has to know that you're honest with them, transparent, and you explain them why you think the business makes sense or not. Look, we always say, and that's our vision, we are preferred solution provider. But you have to be honest with the customer as well, that this time I am not the best. And that honesty is very important for the customer, because it's like buying a pen. If you go into a shop and somebody tells you that pen fits you great, but actually it's not good, you will never go again to that shop. And for the customer, it's the same. They know exactly that we are transparent and that what we are doing, reliable in how we approach it. And it's inside the company, because you have to be able to speak to the person at the reception, working in the kitchen in the same form like you're talking to a division leader. Definitely all of us are proud of what we have done. Now, all of us should be and have to be proud where we have started and where we are. And you have to be careful of not showing that, no? And thinking you have done it. Or without me, we could have not done it. I think that's a principle we have always learned and applied in Motherson. It's either we have done it together or nobody has done it. Levente, wow.
Humble is coming from the Germans. Wow.
Tibor Levente, Executive Vice President for East Europe and Germany Operations. And since 10 years with the Motherson, since the takeover of the Visior Corp division. A very interesting journey. 10 years ago, we didn't even imagine to be here where we are right now, but with a fantastic team together, we did it. And SMR Hungary became one of the strongest companies in the SMR mirror division. Being globally local means Motherson is like a real big family. We can live far away from each other in different parts of the world, but when we talk to each other, our soul is vibrating with the same frequency. So all the competencies, all know-how is coming together globally, and this is then spread it out locally. Motherson's culture is to empower local management, and the social relations between local management team and our employees is like the muscles, and these muscles are bringing the organization forward. One of the best examples being globally local is how we are setting up new plants.
If we need to settle a new factories here in Hungary or somewhere else in the world, the customer who is giving us the business wants newest technology. For the newest technology, we need to bring some experts who is help us to build it up the new paint shop. But of course, we need to keep the local regulation. In the automotive, needs to do everything very fast. We have no time to wait for a permit. If the authorities trust us, of course, help us to achieve our goal.
The financial aspect for setting up a new plant is also extremely important.
Growth is typically something locals would not easily understand. So therefore, a very excessive and extensive education is needed so that everybody understands how he or she can contribute.
During COVID-19, being locally, globally made us stronger.
We received the global guidelines and we have to apply the guidelines to our local guidelines. We wanted to keep our employees.
It was extremely important to give them the feeling that we care about our people, we care about their families. Show to the employees that people are first.
And yeah, together we made it happen.
Thank you.
Great job, team. I like the way you explained the whole thing so that people will understand it better. Thank you.
My name is Mark Rosenmeier. I'm the CTO of Motherson Innovations. After I met Warman and made the decision to join the company, it was a very positive impression. Warman was growing the organization and was looking for additional people to contribute to his vision. And I had the opportunity to join the group and the team, and we had a very exciting journey since then. So Motherson Innovation was created to support the business divisions with innovation. If you compare the business divisions as vertical, we are a horizontal organization. We are connecting with all of them. We are about 50 people. We have a team in the US, we have a team in the UK, Germany, and India. We're working together with the business division. We identify what they're looking for. They are listening to the customer. They know exactly what the customers want to bring into vehicles in 3, 5, potentially even more years. And we align these different technology topics in a way that we support them developing concepts and prototypes. To focus on the presence to get to the future really means that we need to be proactive, because the mobility industry is seeing many, many changes. We have the connectivity, we have the electrification, We have the increased autonomous driving capability. All of that is impacting our customers. Now add the digitalization, the big data, the artificial intelligence in manufacturing, for example, and the willingness and the commitment to operate in a sustainable way. All of that is changing our industry in a speed we haven't really seen before. So just keeping up with the technology is not enough anymore. We need to be proactive and work on these topics so that we can meet these challenges. We listen carefully to the customers and we interact on a global basis with an ecosystem of innovators and startups. They are all leading in their field. And we bring that together. We bring it to the group, we bring it to the different business divisions. They compare that with what they have in their Vision 2025 so that we can implement these technologies early in the process. The future is always bright. We will have cars which are almost fully autonomous already in the near future. So that means less distracted driver, less accident. People can use the commute time in a more effective way. Electrification, very, very important to really achieve sustainable economy. At Motherson, we are proud to be part of the future. See you in 2025.
Well, Mark isn't back from the future yet, so I'll throw the ball instead.
So let's start by briefly looking at the Motherson journey so far. The journey from 1975 till today has been simply exhilarating. We have always hoped and dreamt of becoming a large company, but none of us could have ever imagined what we have actually achieved. We have gone through several stages. At first, our goal was to learn the trade by focusing on achieving excellence just in the Indian market. As we succeeded, the international OEM started to give us opportunities outside India as well. So we ventured abroad, especially from the mid-2000 onwards. Then we received a major opportunity to do acquisition like SMR in 2008, which transformed us into a truly global company. As we turned SMR around successfully, our customers asked us to look at even larger acquisitions such as SMP in 2012. This meant we were in touch with all the world's major OEMs, and then from 2015 onwards, we are now a part of the top league. During our journey, we have achieved stupendous growth rate, a CAGR of 35% over the past 27 years, year on year. This has generated tremendous amount of value for our investors as well. Your investment in 2,500 rupees in Muscle IPO in 1993 is today worth 5.5 million rupees or 2,211 times. This has been more than many of your favorite stocks in all over India, isn't it? One of our primary targets in all our 5-year plans has been to achieve a ROCE of 40%. ROCE is very important for us, as taught to us by Nimish, as it measures the efficiency and effectiveness of our entire company. Naturally, when we acquire new companies and invest in greenfields, our ROCE drops. And that chart above also shows this. COVID clearly impacted our scorecard here. We would like to look at financial year 19. The consolidated ROCE was just 15%, and the standalone ROCE was 42%, right above our target. Now, with all the big new facilities stabilized, we expect our ROCE to substantially improve in the next 5-year period. Vision 2020, we crossed a number of important milestones. Our top line increased by approximately 3.4 billion. 41 new plants have been added globally. 6 successful acquisitions. 3,000 associates have been added in our past 5 years. We achieved very successfully 3CX15 for customers for the first time.
Yes, Dad. And let me give them some more detail around what we achieved in our 5-year plan. For example, in Vision 2020, we built a record of 41 new plants, which included 16 greenfields and 25 brownfields. On the lighter side, people were only concerned about a couple of greenfields in this entire story, not seeing the work that was going behind, making the rest of them a big success. However, all the greenfields now are past the initial stages and will not qualify as being greenfields anymore. Tuscaloosa, for example, was the largest organic investment we ever made. This was a big, daring, bold bet for us. But true to our vision of being a globally preferred solution provider, we took it head on and went to a place where we had no presence for SMP. Yes, we faced numerous challenges, but true to our DNA of never give up attitude, that we turned this facility around as well, even though we had numerous headwinds that were out of our control. We made use of the COVID period to streamline our processes and strengthen the teams, which has led to a turnaround at SMP Tuscaloosa. We have also embedded all our learnings in this big new greenfield for us in our processes and are now ready to take on more new organic growth opportunities now that we are confident that we are able to turn these around. Since inception, we have done 24 acquisitions so far, out of which 6 were just done in the last 5 years. There was a 7th one recently concluded in this new 5-year plan. We welcome PKC into our family, which is the largest global CV wire harness player. Then SMRC came in 2018, which helped expand our polymer footprint in the mid-entry level segment and provided the division a relatively new customer and geographic presence. The acquisition of Bombardier's rolling stock wiring harness business in the UK in 2019 has further strengthened our product diversification and established Motherson as a key strategic partner of Bombardier. Proud to say, we have added 50,000 new members of the Motherson family in the last 5 years. Another important target which has been achieved is what we call the 3CX15, in which no customer, country, or component should contribute more than 15% of our revenues. As you can see in the above charts, we have made significant progress on this, and as well between 2015 and 2020, as no customer today adds more than 15%. This is the first time we achieved this milestone and delivered our diversification strategy. Similarly, we've also made progress in our geographical spread and diversified presence without degrowing in any part of the world. We believe we still see further improvement as we move towards 2025. On the product side, we have added new components organically and through acquisitions. We have grown capabilities on all product lines over the last 5 years. As we move forward, in a reorganized group, we will have access to a much wider product portfolio to grow and diversify further. Our proposed restructuring will help us progress further on all the 3 C's in 3CX15. We have proposed a restructuring of the Motherson Group that we believe will provide the foundation and support our future growth. The chart above shows the situation today. As you can see, SMRP BV is split in ownership between MSSL, our listed entity, and SAMIL. Moving forward, and if the shareholders approve, the above chart shows the new situation from next year onwards. All companies will be brought together in one group, and SMRP BV will be 100% owned by the new listed entity, SAMIL. The domestic wire harness business, which we call the DWH, will be separately listed to meet the request of our long-term collaborator and partner, Sumitomo San. It also means that our product portfolio has significantly expanded beyond what you were used to in MSSL in the past. More specifically, we have added lighting and electronics, precision metals, IT, logistics, aerospace, and health and medical, which have been added to our verticals. These new divisions too will help us enormously to expand and create new value for our customers around the world. The restructuring also means that under one umbrella, we go from 220 facilities to now 270 facilities, from 14 to 27 new joint ventures, from 115,000 to more than 135,000 associates. As you can see, as one group, we are now more diversified, larger, and stronger for capturing incremental growth opportunities in our journey to 2025. Our vision continues to be what it has been since 1995, to be a globally preferred solutions provider. As we embark on our journey forward and the reorganization is approved, the Motherson Group will start this being a $10 billion company, including gross revenues from all our unconsolidated joint ventures. Before we move to discussing our new Vision 2025, let's take a look at part 2 of our 25 for 25 movie, which will tell you more about how we are aiming for excellence in everything we do.
Excellence is all about QC, DDM, SES. Cheers. Chapter 2, Quality, Cost, Design, Delivery, Management, Safety, Environment, and Sustainability.
I'm Lakshvaman Sehgal, I'm the Vice Chairman of Motherson. The principle of separating entrepreneurship and professionals is simple. The idea of distinguishing the entrepreneurship from the professionals is something very unique to Motherson. And I think the most important aspect of that is to make sure that the professionals can focus on the execution side and not worry about the risk capital. That's taken by the shareholders. It gels very well and it allows people to focus and really overachieve. I think this whole relationship between entrepreneurs and professionals is based on trust. If we can't trust the professionals to execute, or they can't trust us to go after the right market opportunities, it can never work. I think that's what draws me maximum to the business, that we have uphold such strong values and ethics in the business that we do. My job is to make sure that no matter what we do in the future, even if we diversify, get into different industries, that spirit with what he started with is maintained. And of course, we are also able to evolve it and make sure it's relevant for the new challenges and the new growth era that we are going to go for. Over to you.
How true, Vaman. If the ownership understands the responsibilities and the actions of the professionals is in the best interest of the company, that's success, guaranteed.
My name is Akihiko Yamauchi. I am the head of Regional Chairman's Office, Japan. I am staying in India from 2000 to 2008. Buy yourself and better yourself means you should stop comparing yourself with others. You should focus on yourself and your present standpoint, and then look forward to your goals persistently. This action, BYBY, has a positive impact on the entire organization. The BYBY principle accelerate the tasks towards the goal in the organization. It means daily improvement activity of each person will provide a great power to the organization. The mere group changes into the strong team through this principle. I remember 2 assembly lines achieved 170% efficiency. Can you efficiency, 170% efficiency when I was in India. It was a very tough task, but they did it. Unbelievable. All associates together made an effort day after day to enhance individual skill in strong teamwork. Leaders must do yourself at first and respect the power and character of each group member and make them shine to the fullest. In case of Ikebana, the person who put in the flowers in the vase works out to make each flower shine. Ikebana is a Japanese art of flower arrangement, one of the Japanese traditional culture. All flowers work well in harmony, and that is how Motherson works.
USA now.
My name is Charles Zawadzynski. I am a CEO of SMR and S&P. I joined Motherson on 18th of June 2003. We were experiencing very challenging conditions with a number of our customers. In fact, I remember on my second day of the job, I lost one of the biggest contracts we had. It took me probably 5 years before we actually regained that program. And we actually are rocking now. Learning from mistakes is one of the most important mantras of our company. We do that to shorten the learning curve, to avoid making the same mistakes all over again. Falling off the horse is a very embedded part of horseback riding. If you didn't fall off the horse, you never learn how to ride a horse. Horseback riding gives me incredible satisfaction. They feel who you are before you actually know. They teach loyalty, helps me also to develop myself as a human and as a leader. It is okay to make mistakes. Motherson accepts making mistakes. It's part of being learning company, evolving company. And today, when we are constructing a greenfield, those learnings that we have gained over the last years, learning from the mistakes, are applied today and making those launches of those greenfields seamless, shortens that curve of delivering best services, best product to our customers. Yamauchi! Eric! The next 5 years are going to be incredible ride.
Wow. You have to learn from your mistakes quickly.
My name is Eric Ozepi, and I am the COO of SMRC. I've been part of Motherson since 2 years. My first impression was to join a company which is very welcoming, having an easy access to the top leaders of the company, putting my skills at their service, and at the same time being invited to overachieve and obviously meet the goals of the company. The principle of implementing technology horizontally is to constantly upgrade our skills and expertise in innovation, in engineering, in manufacturing, in after sales, and to bring this knowledge between sister companies all across the world so that we can be more cost efficient, deliver better quality, and implement our solution faster to serve our customer needs. As an example, we have constantly developed computer-aided design and computer-aided engineering in terms of simulating the behavior of our plastic raw material facing any constraint, temperature, humidity, shock constraint. All this knowledge has been shared with all our sister companies worldwide.
How simple a complicated thing can be, it depends upon us. And this is horizontal deployment. Means it's already done. You just have to do it again. That's it.
My name is Barry Painter. I'm the Executive Vice President of Sales and Marketing in Motherson. So joined in March 2009 as part of an acquisition that Motherson made. Actually now 11 years. I think without a doubt, the thing that I really see as different in the way that Motherson works and the way that Motherson thinks is that you're quickly put in a position of trust that you are responsible for your piece of Motherson, that you're responsible for delivering, feel that freedom to shoot for the stars. What that means is having the freedom to imagine, having the freedom to dream of what we could achieve. We aim for things that people may otherwise have imagined not possible. And if you don't quite get there without that fear of failure, it doesn't matter because you'll be much further along in your ambitions than you would otherwise have been. Everybody collectively being aligned to that and working together for it is actually very motivational, very good for the business and for anybody who's part of it. And there's always something to learn when those challenges are coming to you. So yeah, I wouldn't be here 11 and a half years later if I didn't, let's put it like that.
So always aim for the stars.
Let's look at Vision 2025 in more detail. We have defined 4 major targets for 2025. First, $36 billion revenues in 2024-25 with a 40% ROCE. Number 2 is 3CX10. No country, no customer, no component should contribute more than 10% to our revenues. The number 3rd is important. 75% of our revenues will come from the automotive industry, and we will look for new divisions which will contribute 25% of our above stated target. And number 4, 40% or more of consolidated profit will be paid out as dividend. It is important to understand succession planning, and in Motherson, we believe that's much better than succession gambling. As we move to 2025 and our company grows, one thing we are strongly focused on is making sure we have enough talent on board that understands the Motherson way of doing business. People who are really a part of our family and who truly live and breathe our values. That is why we follow the principle of WIT. Who is your number two? We are building Motherson for long term. Therefore, it is important to ensure a continuous availability of talent at every level of the company all over the world. So I guess, Vaman, this means you're my number two? Now, some of you might wonder, why set such a huge target when we have not achieved our previous target?
Let me answer that question, Papa. And the answer is simple. Because we believe it's possible. We did not just pick a number to get to 36 billion. We actually followed a bottoms up approach for setting our targets, in which each division looks at its existing opportunities and the evolving customer demand. In addition, we factored in an inorganic component as well, based on the division's view of the current and future market dynamics. In the past, most of our acquisitions have been customer led, and even this next 5-year period, we hope to take the customers along with us for our future growth. And we hope many of the opportunities that we see today will also materialize in this same way. There are many acquisition opportunities that exist in this market. There have been a lot of speculation reports in the media. As you can see, if we had bought all these companies, our total top line would have increased by at least 13 billion. And if these all companies were added to our Motherson portfolio, it would have already taken our top line past 23 billion. By the way, 2 out of these 3 are still available in the market today at perhaps better prices. As we all know, we don't just chase top line growth for the sake of it. You're all aware of our mantra. Top line is vanity, bottom line is sanity, and cash in the bank is reality. For all our acquisitions, we have to see a path to lead us to the 40% ROCE. Now, going forward, as we think about 2025, we have to take the current business environment into account and what that means in the current pandemic, as well as for our journey ahead. The world came to a standstill. It was an incredible situation, perhaps the strangest in our lifetime. There were fairs without kids. Here's a picture from Delhi, which is totally shocking. There were concerts without audiences. People changed this to doing it online. There were roads everywhere without cars. As a result, the global vehicle production, which was already slow, dropped dramatically in the Q1 of 2020. And of course, this was a shock that went through our entire system and across the world. And this meant that some of the acquisition conversations which we were engaged in had to be put on hold, as our customers turned their attention to managing the immediate crisis, and so did we. On top of all of that, some of these potential target acquisition companies were also bailed out by governments. This was done to sustain employment during the lockdown and the pandemic. But Motherson came out very strongly. You see, our plants in China, which were the first affected before the rest of the world, were the first ones that had gone into lockdown and also first to come out of it. So we knew how to handle and act in this pandemic to protect our staff and run our plants using measures like sanitization, social distancing, etc., before this became common knowledge. When the pandemic spread in other parts of the globe, our teams shared best practices from the learnings of China to our global plants in order to ensure health protection for all our employees in the form of standard operating procedures. We were not only better prepared, but also very quick to respond and adapt to the new circumstances. We also set up a quick regional task force that, along with creating new processes, took the support from our central purchase teams and purchased over 160,000 masks in a stress supply situation. Our IT company Mind made sure that all the offices and work from home setups were provided quickly so that we remained connected. We developed an internal lab to help maintain communication with the employees, which was quickly deployed globally, giving us complete visibility on the situation as it was unfolding real time. And we were able to spread these learnings to all our facilities around the world. All of the regional chairmen's offices worked closely with the respective local governments to ensure safety measures were in place for employees and government support was available when needed. This meant that we were ahead of the curve and could limit the damage as much as possible. In addition, our plant started many initiatives to support their local communities and the local needs. For example, at SMRC Media in Spain, the team made face protection masks for hospitals. Similarly, SMR France produced protective visors for the doctors, firefighters, nurses, and medical researchers in its local area. Also, our Indian company Smile built sanitization tunnels that were deployed at the plants. We are extremely proud of all these developments. This also meant that we learned how to quickly ramp up again when the lockdowns were lifted, so that we could continue to support our customers without affecting their lines. At the moment, I'm really proud to say that approximately 80% of our facilities are already running at over 75% capacity, indicating that things are coming back to near normal. As you can see in the above chart, our liquidity position remains very strong, and we believe we will be able to do a lot of acquisitions because there is a lot of pain in the system. You see, as a lot of companies that were already in a difficult position before COVID have been helped through the crisis based on government support. However, as this support runs out, they may need further support after COVID. And we believe our customers will ask us to look at many of these opportunities. Therefore, we believe that we can really make up for what we were not able to do in this late 1920 period due to COVID and move forcefully towards our Vision 2025. We also believe that the environment after COVID-19, which will be favorable for us as a strong automotive supplier. This pandemic has slowed the shift towards shared mobility, and the argument for personal ownership of vehicles is now stronger. While some shared mobility offerings have decreased, some offerings like pool share rides, etc., have been completely wiped out from the system for now. Also, shared mobility rides are down even now at least 20 to 30% across the globe, while car sales have almost normalized around the world. In addition, not just shared mobility, but even other alternate modes of public transport, such as short range flights and intercity trains, are now seeing a shift in usage patterns towards private vehicle ownership, which is a huge plus for us. So it's not just user preferences. As you can see in these charts, there has clearly been a strong recovery in light vehicle production across every major geography post lockdown. Thus, despite the disruptions from COVID, we are well positioned with strong liquidity and ample acquisition prospects to lay a clear path towards our Vision 2025 targets. In the next section, we will look at these growth opportunities in even more detail. But before we do that, let's watch part 3 of 25 for 25 that is all about trust.
The trust of the customer on you should be like a trust of a mother and child. Well, that's the reason why we call it Motherson.
So, should we call it Father Son now?
Chapter 3, Trust.
My name is Pankaj Mittal. I'm the Chief Operating Officer of Motherson Sumi Systems Limited. My basic role in the group when I joined was business development. And I look after the entire wire harness business. I started with Motherson way back in 1990, so it's just been about 30 years. Gaining trust is not a one-time activity. It's being reliable all the time. And reliability means that we have to continuously keep performing, keep doing our best on all the parameters. So at Motherson, there is a purpose to be in business, and that's to be proud of something bigger. And we want to be part of our customers. To be a part of them, it's important for us to do a good job on QCDDM SES. As we do a good job on QCDDM SES, it creates trust. and that trust allows the customers to give us more opportunities. So the way it works in Motherson has been that we trust all our people. We trust all our associates. We know that nobody joins us to do a bad job. So even when we have mistakes, we don't blame our associates. Never. We try to find out that what was it really which made him do that mistake. And we see it as a mistake of the management not to train him or not to give him those tools. And that's what we do. And that's where they then feel that they are being trusted. They try to give their very best to us. And that's how this whole chain works. So it's an infectious thing, I believe. I know that when we are all working for a good cause, there is nothing which can stop us. So I have no fears. And we have done a lot of things, a lot of acquisitions, gone into new areas, because we always believed in ourselves, we believed in our people, and we believe that since we are doing it for a good purpose, there are no fears. We have a lot of fun while we work. We crack jokes, even in very difficult circumstances. We like people to enjoy it, their work. So we don't like to become members of the board, B-O-R-E-D.
That's what 100% trust means.
যদি তোর ডাক শুনে কেউ না আসে তবে একলা চলো রে।
I'm Vivek Chand Sehgal. I'm the chairman of Motherson Group. I'm the son in Motherson. I don't think English really has a word which will tell you what the journey has been. Unbloody believable. Right out of someone's imagination. And a journey where we have seen a lot of people come in and join the walk. And what a walk we've had. So Akla Chalo means walk alone. For me, it was important to figure out a way by which we could excel in what we are doing. We wanted to go beyond. So if you have to go beyond, then there is no person over there who's a teacher. Collective dreaming is very important. Dreaming in the night or dreaming in the day by yourself has no meaning. It's when a collective lot of people start to dream together. That is walk alone. That is Akla Chalo. Probably one of the best examples is Do 33. Do 33 meant that I wanted 33% improvement every month, which people tell me is not possible. And in Motherson, we do 33% improvement every month. For the last now 18, 20 years, we're doing it. So the ability to break the boundaries is the main thing about Do 33. And that's a great example for Akla Chalo. Motherson gives you the capability and the wherewithal to make your dreams come true, which I think is amazing, isn't it? The turnover and all that is not such a big this thing for us, but it's the purpose of creating employment globally. Today, Motherson has about 130, 140,000 people working for it. That's 140,000 families globally, which I think is a very worthy cause for us to grow. And that's why I keep saying, let's grow. Let's set good targets which people would love. And if you achieve it, whoa, it's the best that can happen to you.
কেউ ফিরে না যায় তবে পথের কাঁটা তুই রক্ত মাখা চরণ তলে একলা দলরে যদি তোর ডাক শুনে কেউ না আসে তবে একলা চলো রে যদি তোর ডাক শুনে কেউ
I think I couldn't have said it better myself.
name is Paul Breen. I'm presently working with Chairman's Office, Europe, as VP Operations. I started with Motherson way back in 1996. The journey has been fantastic. When I started, we had maybe 200-300 people. Now we're hundreds of thousands of people in so many different countries. The journey was at times very difficult, a lot of challenges, but great experience along the way. Motherson is different insofar as the DNA, the culture. A lot of our principles are coming directly from our chairman, and now our vice chairman is adding his principles. Something that we can believe in. There's something to hang your hat on. And blood is thicker than water. We want to make sure that the family is supported across the world. Well, you know, all for one and one for all was the motto of the legendary guardians of the kings in 17th century Europe. And I think for Motherson, what it really means is that Motherson relies on each one of us. Each one of us can rely on Motherson. Motherson is a company that acquires companies that are in trouble. When they're in trouble, they need some help. One of the first things that I always say when I go into these companies is we're coming in to support, but within 6 months, you will be in the same position where you're supporting our next acquisition. And that's always worked out true. They don't believe it at the time, but in every single case, it's been the truth. And of course, you've got to go in with the right attitude. You can't go in and take over a plant. You have to go in and support the plant. So it's like when you break a leg, you need crutches. You have crutches for a few weeks, but then your leg is fixed again and you can walk on your own. When people see that we're not just putting slogans up on the wall, but we're living that way of life, that way of working, then they understand that this is a different type of company. And I think they're very happy to take that on because they feel that it's really a family. It's not just a slogan. People can grow, gain opportunities, but they also can enjoy the work that they're doing. Our chairman often said, you must take fun seriously.
All for one and one for all.
When you see the smiles on their faces, the tension released, then you know that you've done a good job.
Absolutely right.
My name is Vivek Avasti, and I've been with Motherson for about 32 years, and I'm loving it. I do anything that others don't want to do. Now, in Motherson, we have a very different culture. It is not given by any governance or any legislation. It has come from the heart. We are culturally diverse inside. Okay, team, take it away. What we are here today to celebrate is Holi, Festival of Colors. What is important about this particular festival is that we treat everybody as equals. Once you're colored, it doesn't matter who's who, we're all equal. The benefit that Motherson has, you can get different views. You can get views from our good German friends, our Japanese friends, our Americans, etc., etc. They will give you their point of view. And it makes so much sense to listen to them. And we have such a big advantage of having people from 41 countries. And I think this will take us forward 2025, 2050, it doesn't matter. We just need to keep going forward. These are the kind of colors that we love in Motherson because this kind of depicts the fact that we welcome any and every culture within Motherson. So, throw me the ball. Yes! And now we go next.
So, a great way of understanding diversity and how they all work together and live together is this tree. It's actually 5 trees in one, and they have grown naturally. So, when people are working together in Motherson globally, different cultures, different people, different habits, different everything,
we do exist very well together.
Now let's look at how we think Motherson can grow and achieve our 2025 targets. As we said, our journey has just been amazing. And as a group, our gross revenues today stand at 10 billion US dollars. This is the starting point for our evolution to becoming a $36 billion group. We have broken down this growth into four fundamental building blocks, namely 1. Business growth in current product lines, 2. New technologies into current products and processes, 3. Adjacent expansion, and 4. Diversification into new industries. We see the first three stepping stones will generate 27 billion in annual revenues, and we expect the fourth one to add 9 billion. The presentations that you will see tomorrow will use these building blocks to explain their growth targets. And all this growth across these four building blocks will be, of course, achieved through our organic growth, partnerships and joint ventures, and acquisitions that we do along the way.
Yes, Vaman, we diversify, but the automotive sector remains of tremendous importance to Motherson. For 45 years, we have done nothing but automotive and kept our focus. And going forward, it will be the center of our journey. We remain committed to it as we believe it is a fantastic industry to be a part of. We eat, drink, sleep cars, remember? We have created a 5-minute movie that further explains this by showing why the automotive sector is such an exceptional, important driver of the global economy and why it plays an indispensable role in the daily lives of almost all the people on the planet.
Of all human activities, being mobile is one of the most vital and empowering ones. This makes the automotive industry one of the foundations of modern society.
My favorite car is the Jaguar F-Type.
My family is first, and then is my car.
A car is a necessary means of living in this world.
Ich liebe mein Auto.
This film looks at some of the ways in which the automotive industry influences the global economy and touches almost every person on the planet.
Ich liebe meinen Wagen. Oh ja.
The automotive industry in the global economy. Studies suggest that a 1% growth of the auto industry translates in a 1.5% growth of GDP in developed countries. If the automotive industry was a country, it would be the 6th largest economy in the world. In 2018, automobile production fell for the first time since 2008 by about 2%. The IMF thinks that this fall in output accounted for more than a quarter of the slowdown in the global economy between 2017 and 2018. More than 10 million people are employed in auto manufacturing worldwide. Each of these jobs generates 5 additional jobs in associated industries. Together, the people involved produce approximately 70 million cars and 25 million commercial vehicles per year, generating more than $3.5 trillion in revenues. Many of these vehicles are chauffeured by millions of professional drivers who bring people and goods to their destinations. Without them and their vehicles, our society would come to a halt.
Gut, da ist mein Arbeitsplatz, mein Schlafplatz, meine Küche, ja, und unter der Woche eigentlich mein Zuhause.
The automotive industry is also a large customer for other industries. For instance, it accounts for half of the global oil and rubber production, a quarter of the glass, and a 1/6 of the world's steel production. Owning a car or having access to public transportation makes our world much bigger. We can commute, we can study and work in the next city, We can visit our friends and family in another town. We can take a break from our busy lives and go on holiday by driving to another country. Along the way, this generates jobs in car repair centres, gas stations, car wash centres and in roadside restaurants and hotels.
Ich bin mit Herz, Leib und Seele bin ich Autowäscher, auf jeden Fall, schon seit 20 Jahren. Ich liebe natürlich auch Autos, ganz klar. Wenn man Autos wäscht, liebt man auch Autos, ganz klar.
Throughout history, technological innovation in mobility has allowed us to travel further, faster, safer, at lower cost and at higher comfort. They've improved the quality of life of billions of people every day. Today, the automotive industry is embracing new technologies and taking steps to improve sustainability in ways not seen before. For example, the use of natural and recycled materials to reduce environmental impact, lightweighting through the use of advanced materials and new designs, and innovative technologies such as blockchain to help track and reduce carbon emissions. Globally, car makers spend over $100 billion each year on R&D. All these innovations make cars more connected, electric, shared, and sustainable over the coming decades. They offer unprecedented opportunities for car makers and their suppliers, as well as for startups inside and outside the industry. Finally, our vision of the future, as shown in movies and popular culture, has often been defined by the vehicles driven by our heroes and their adversaries. Vehicles define their era. In other words, transportation not only plays a vital role in the economy and our everyday lives, it also shapes our aspirations and our hopes for tomorrow. For all those reasons, the automotive industry is truly one of the foundations of modern society and an indispensable driver of the global economy. At Motherson, we are very proud that together we are part of it.
Wow, that was an impressive movie. Anyway, tomorrow in the divisional presentations, you will see detailed explanations of how the divisions are planning to grow through each of these 4 building blocks that I have mentioned. I will just give a brief summary so that you already get a glimpse of what you can expect. In the next 5-year plan, we will continue to grow in our current product lines. For example, in our vision systems vertical, we are strongly working towards increasing our penetration into the Japanese OEMs. As most of you would already know, the Japanese OEMs constitute more than 25% of global production. And for now, if you look at our vision system offerings, less than 10% goes to the Japanese OEMs. Clearly, there is room for growth for us over there. Similarly, for vision systems, we're also looking at other geographies where we are underpenetrated, like Russia and South Africa, and have focused strategies to grow bigger in these markets. Similarly, for our modules and polymer business, we clearly have immense scope of organic growth in the US market. Expansion of our footprint in China, Europe, India, and Africa, and increasing content with our customers and also with commercial vehicle customers. Likewise, the opportunity for organic growth in all our businesses is immense, and we are highly focused on targeting each one of these opportunities in the next 5-year plan. The second building block is new technologies into current products and processes. Here, our various divisions will tomorrow share with you their plans as well, and you will see a lot of examples. To know how we can grow the value of the products and services we provide to our customers and where we are able to expand our offering into new segments and industries, it is essential to look at the driving forces and how we can adapt to change. Our goal here is to be a customer's preferred solution provider, which remains the same for today and for the future. Above all of the industry forces and influences that can shape our future is the dire need for sustainability. This is a major factor behind the evolution of industrial trends, as it stems from the fundamental needs of the environment and societies in which all of us live and work in. We share the sustainability goals of our customers for carbon neutrality, social well-being, and for increasing economic circularity throughout the value chain. Our focus on QCDD MSCS helps us to deliver the performance to our customers that earns their trust and brings us closer to being a globally preferred solution provider. The S of sustainability has always been a part of that. So our existing KPIs to our teams provide a foundation upon which we strive to be sustainable in everything we do. So let's look at what we are planning in these areas.
At Motherson, we have always aimed to be a customer's preferred solution provider. And in order to do so, we listen to their needs, while in parallel, understanding what are the key drivers of change affecting the priorities in the automotive industry. Climate change, health and safety, resource scarcity, demand for customization, regulation, changes in consumer demographic, appetite for technology and urbanization, together with the enablers of digital twin and artificial intelligence, are all very relevant. The known trends in the auto industry of connected, autonomous, shared, and electric have been with us for some time. But recently, the focus is shifting with consumer experience and sustainability now of higher importance than ever before. As sustainability has emerged as a top priority, we've had a reminder in recent times of the lockdowns that have happened as part of the global pandemic, where the environment has clearly benefited from changes in mobility. We've also seen this give us an accelerating effect on the sales of electric mobility, with both electric and hybrid vehicles more than doubling in volume in the last 12 months within the European Union. Connectivity is now expected by the end consumers to be available to them at all times. This also means the vehicles need to be connected to the outside world in order to ensure that experience is possible. Automotive interiors have been evolving into living spaces. The consumer's expectations of the experience they gain from that interior with added feature content and high quality materials and finishes to make their mobility experience as comfortable as possible. For Motherson, we ensure that our focus is aligned to the priorities of the industry and the needs of our customers. To do that, we've developed 5 focus areas: immersive interior experience, smart vehicle dynamics, connected electrification, intelligent manufacturing, and environmental sustainability. Let's hear from Esther, Timo, and Deepak with their insights on some of these key areas.
As the cabin of the future is more intuitive and connected, we're making our interior solutions smarter. We're turning surfaces into responsive user interfaces. Our natural materials transform vehicles into beautiful living spaces, fully empathic to passengers.
In the era of the smart and electric vehicles, we seamlessly integrate advanced sensors and lighting solutions while making our parts lighter and more intelligent, reducing drag through active airflow and increasing safety.
The advancement in automotive technologies and ever-increasing demand of features and content is creating huge opportunities for electrical and electronic connectivity solutions. This is an exciting time for us to provide unique solutions for high-voltage applications, network battery management systems for state of charge, and smart DC-DC conversion to meet zero-emission vehicle vision of our customers. Our smart power distribution portfolio of passive and smart junction boxes uses solid-state devices and software for control, switching, and protection to provide flexibility and scalability for both low current and high current distribution. Amalgamation of these elements and technology for various applications is future ready, increases the value added content in our products, and helps achieving lightweight, space optimization, performance, and complexity management, and fulfills the growing needs of consumers across geographies. Thank you.
As a global manufacturer with operations all over the world, intelligent manufacturing is a very important focus topic for the Motherson Group. 3 examples of our activities in this respect are autonomous robotics, where materials automatically move around our factories, and cobots work in harmony with our highly skilled employees. Artificial intelligence applied to quality inspection, ensuring the high quality and repeatability of the finish of our products. And predictive operations, where smart data analytics and predictive maintenance will ensure the efficiency and reliability of our operations into the future. So how do we ensure that we have knowledge of the innovation and technology that can come from experts outside our organization as well as from within? Let's hear from Mark Rosenmeyer of Motherson Innovations about this.
Motherson Innovation plays the role of connecting the dots. We are the channel that connects the vision of our customer to a global ecosystem of innovators. The scale of our operation worldwide underpins the culture of innovation through collaboration between our centers of excellence, external technical institutions, and startup partners. This collective is ready to work with OEMs to ensure their needs are met at every stage of the process. We evolve through learning, collaborating with innovative startups, bringing bold ideas to life to add value to the world's most admired OEMs. Through this approach, Motherson Innovations seamlessly brings great ideas from development to production.
So now I would like to come to the topic of sustainability. For Motherson, we make sure that we are aligned to the needs of our customers in this respect and of the environments and communities in which we work. Across the world, our customers are committing, and here are some key highlight points of the areas where we are aligned to their needs. Looking for economic circularity, the use of renewable energy, the reduction in energy used, carbon neutrality, waste reduction, and ethical business practices. In Motherson, we have the foundations of our business built on the DNA of the group, and then we have our key performance indicators, one of which is sustainability, has been with us for some time. So as we build our ambitions in sustainability on the foundations of those key performance indicators, we can develop strategies for change and seek towards our goals of sustainability within our Vision 2025 and beyond. Environmental sustainability for our products and our processes can manifest itself in the use of renewable and natural materials, the engineering and design processes that we employ, and the manufacturing processes ultimately to produce these new products, and for us to be future ready in the offerings we have for the market. In conclusion, the responsibility for sustainability lies with us all, and we will stay very closely focused on aligning Motherson to our customers across the world.
The third building block is new solutions in current industries. As you all know, Motherson is known to be a not yet company. This means that if a customer asks for a solution that we currently do not provide, we will never say no. Instead, we will always say not yet. Here, our divisions will talk about how they see the opportunities for further expanding within the automotive sector through new products and solutions. The chart above mentions some of the examples which we are very excited about. The fourth and final building block for growth is diversification into new industries. But before we go into that, let's look at part 4 of 25 for 25, which is all about being asked to do more.
When the customer has trust in you, he will definitely ask you to do more.
That's an excellent strategy, Papa, but checkmate.
Chapter 4, Ask to do more.
My name is G.N. Gaba. I joined the group in 1997 and I'm the CFO for the company, and I'm about 58, 59 years old. The role of CFO is quite challenging and different in Motherson because you are working for a company which is working for growth. You are not just working as a gatekeeper, unlike many other CFOs. When I joined the group, it was approximately 100 crores, and today you see the company where it is today. Focus on growth was brought in when we decided to go for global expansion. We thought it will be good to have a common KPI, as people call it, which can be used across the businesses, across the geographies, and can be simple to understand. We felt return on capital employed brings the whole organization into play. It has something where everybody has a role to contribute. We organized a lot of workshops. We made a small presentation and addressing the audience. If we were talking to the maintenance people, we were telling them how the upkeep of the machinery can improve the return on capital employed. So everybody could relate themselves when we were talking to the marketing people, how the better credit terms will help us to improve the ROAS. Being an OEM supplier, we are always constrained by the market situation. So the top line cannot be grown unless and until the market grows. Of course, we have grown more than the market because of growing content per car. Top line vanity, bottom line sanity, cash in the bank reality is a very important motto. Whenever we are looking at an opportunity, we look at it, what is the visibility of that business taking us closer to group target of 40% ROAS at a maturity level, which is 4 to 5 years. Of course, this integrates the whole organization internally, but at the same time, as well as gives a clear message to the investors at large that we are focused on sustainability or long-term achievement of ROAS of 40%. It is very difficult to always challenge the expectations of the people, but our job is to keep focusing on our business. If you follow a passion, if you follow a particular path, you can always achieve it. Never give it up.
My name is Sanjeev Mathur. I have been with Motherson Sumi for last 18 years. I am looking after production in Motherson Sumi wiring harness. So breathing with the market means ability to ramp up at a fast pace the way the customer wants. And when the market goes down, the ability to conserve your resources, your cost, which would be an asset when the upswing comes. Breathing with the market also gives you an opportunity when the things are not going well the way it was predicted to train yourself, to train your team, to bring in much more positivity and build up the motivation of the team. So when the upswing comes, the team is charged, energized to deliver. We have a lot of skill competitions continuously. We have a lot of quality circles for our associates. We do not call workers in any of our plants. So there's a lot of focus onto innovations, into new production technology, into a lot of easiness and simplification of our processes. A large percentage of them have come through the ideas given by the associates who are working with so much of diligence throughout the day. So I would go as far as said, a company may not be able to survive without breathing with the market. Sanjay, who is the number 2?
My name is Sanjay Mehta, and I head Chairman's Office South Asia. I have been with Motherson since 2001, which is about 19 years. Oh, every day in Motherson is very exciting. The time really flies. It's not that you have to make an effort to get up and go to office, like coming from one family to the other family. Who is number 2 is the idea that everybody should groom for his succession, and succession planning takes place. One has to look for own replacement, own successor, so that there is continuity in the position when one person moves on to another role. It is also because any new person who comes in, he needs time to understand the business. He needs time to understand the business environment. He needs time to understand the customer behavior. So if you plan your succession, then everything happens seamlessly. It should always be succession planning and not gambling. So in Motherson, we do succession planning at all levels. Like Amit took over my position, a plant head in Bangalore, he took over Amit's position. The operations head of Bangalore took over the plant head position. The manager there took over the operations level position. So everywhere we had a readily available number 2. So it was all very easy, all very planned, and the transition, as I said, at all the places was seamless. A great example of succession planning is Amit Bhakri. He was a great number 2 and is now an excellent number 1.
Who's my number 2? I'm working on it.
My name is Sukant Gupta. I'm head of Chairman's Office Americas. Acquisitions whisper, so we'll listen carefully. The reason why listening is so important in applying this principle is because the customers don't always directly tell us to go ahead and acquire a particular company. All acquisitions that we do are always at the behest of the customer. However, there are times when the customer will just give us a hint. It's for us to read between the lines and then move quickly to decide if we want to go ahead or not with the acquisition. The reason we follow this principle is because we're a globally preferred solution provider. And one of the ways we can solve our customers' problem is through acquisition. I can recall a time in 2013 when we established our first greenfield wire harness facility in North America. We worked on building trust with our customers through operational performance. We quickly realized one of our off-highway customers had a limited supply base and had supply challenges from their main harness supplier. When the opportunity presented itself, we moved quickly to acquire the wiring business, which is called MWSI today. The company's just done phenomenally well. We worked with the team to turn it around, and they won back-to-back awards from most major customers.
Very well said, Sukant. The customer will never tell you explicitly. You have to watch and hear every single word he says so that you know exactly where you have to go.
My name is Vipin Jain, and I am the CFO for SMRP BV. I have been with Motherson for the last 21 years now. I never dreamt of coming up to this level of responsibility which I am handling today, and that is something which I feel very proud of. If things look too good to be true, they usually are. We want to stay vigilant because there can be a situation that the things are looking good, but then there is some problem around the corner which can come and hit us. We have to hope for the best, but then we always have to be prepared for the worst. And this means that whatever profit we are generating is getting converted directly into the free cash. And then this cash gives a lot of power to look at opportunity either to grow organically or inorganically. And this gave a lot of stability to all the stakeholder, whether it is customer, employees, or the shareholder and investor. We have done more than 20 acquisitions in the last many years. And all the acquisitions have been done on behalf of customer because the customers are also looking for suppliers who are very, very financial disciplined and stable. And this is what I am very, very proud of.
Cash is king. You can hold it, you can fold it, you can.
I agree. Top line, vanity. Bottom line, sanity. Cash and bank reality.
My name is Peter Vollbrecht. I'm 38 years old and I'm overseeing and heading the M&A and business enhancement function. We are primarily looking into interesting companies which we target to acquire. We are primarily focused on Europe and working in very close collaboration with our strategy team in Mumbai. The team is one of the most critical factors because only working together and joining hands, we can really move things. When we are talking about acquiring with respect, we are following basically 4 principles. So one is the customer perspective. All our acquisitions have been supported by our customers. They faced an issue that could be financial distress, that could be maybe that there's no long-term vision for that company. And this is basically where the customer is seeing us as a solution provider. The second one is basically the company DNA or the human capital factor. It's not about the machinery. It's not about the greatest technology. The employees who run the business, which is really the key differentiating factor. They respect that there is a real family philosophy behind it. They respect that we will give them a new home, a long-term future, and that's very critical for the employees. The third one, equally important, is about the synergy angle. Try to see how a combination of Motherson and the new company can create something bigger, can create real value. And last but not least, which is very important, is the focus on return, which means that we need to have a clear path to achieve our ROAS targets. We are focused on long-term investments. We have never sold any plant or closed any operation. We are basically there to provide them a long-term future. And then afterwards, when they join forces with you, when they onboard the Motherson train, you sit with them on the same side and you fight with them a good battle towards the next business case. And this is what really makes you happy, seeing how the company and how the family is growing. So when I see what we have managed and been able to put together in the past, I'm very confident that we can repeat a similar story for the next 5 years, as long as the family spirit and joining hands remains as it is.
That's an excellent point.
And finally, the fourth building block is diversification into new industries. Here, we don't mean that we're going to start taking bets into the wild unknown. Instead, using all of our core competencies, we want to enter these new industries based on the strengths that we have created in Motherson over the past so many decades. Tomorrow, you will see in the presentations from the new divisions how we will leverage all of the current Motherson strengths into making a good name for ourselves in the new industries as well. So as Papa said, while automotive will always remain our focus, but we are now targeting substantial revenues from non-automotive business as well. So let me give you a brief rationale as to why we are focusing on these industries in particular. For medical, the industry has seen global supply chain issues that Motherson is well poised to solve. To give you an example, when the automotive production out of Australia was completely stopped, we showed our never give up attitude and transformed our automotive production unit over there and converted it into a medical supply unit. This led to our first diversification. In order to keep our teams, we started working with the local universities to bring exciting concept technologies to the market by supporting them in engineering and mass manufacturing expertise. In the aerospace division, we were first invited by Boeing for the India Supply Conference in 2018. Boeing had previously visited our wire harness facility in Noida, and during that conference, their head of procurement supply had seen Motherson, and while addressing the audience, referred to Motherson as a company that had automated wiring harness, something which they had never seen before and were very keen to look at as a solution. In the logistics vertical, we are currently outsourcing a huge amount of internal logistics, which we can immediately bring inside into our own group. In addition, our OEMs are very satisfied with our commitment and ability and have specifically asked us to provide solutions not just for automotive parts, but also allied industries. A great example of this is a new joint venture with Hamakyurek-san, which was introduced to us by our customer Suzuki-san to solve their car delivery issues to the dealerships. For our technology division, even though our IT company has been with us since the year 2000, we are wanting to build on its growth within Motherson and for the automotive sector, while pivoting it with the opportunity to diversify into other markets and sectors with a focus on manufacturing. These expansions are not random. Our entry into the new verticals is based on proven, existing Motherson strengths. This allows us to create value for our customers in these new businesses from the start. As an example, the strong established B2B brand preference we have created helps our logistics division walk through a lot of doors and also showcase their offerings to potential customers. The outcome-focused approach, which we have been taking for many years, helps us a lot with the aerospace OEMs, who are now well aware of our intensive manufacturing capabilities. Our deep technology skills and quality focus help us to take what we have already done in the medical equipment world to a new orbit. And as we know, our globally integrated supply chain, group and sourcing capabilities, and robust management teams support us in all the new businesses. Shared services and best practices, which were currently housed in multiple parts of the group, can now be leveraged across the entire Motherson family. These key support teams bind all companies together with common practices. Integration of acquisitions would never have been possible without highly competent and efficient central pool of our resources. And now, all the new divisions can hit the ground running with a strong back-end support from all of the group's shared services. So that is our thinking behind the next stage of growth and how we will evolve towards becoming a $36 billion group. As you can see, the first 3 points will contribute to the automotive industry and us becoming a 27 billion group. And the last block, the diversification into new segments and markets, should add a further 9 billion, totaling us to a $36 billion group in 2025. Finally, we would like to share our thinking on how we will generate the funds for this enormous growth. The first source is, of course, free cash flows, which is part of our cash in the bank is reality philosophy. As you know, our capex cycle is largely over, and as the new facilities are improving and going ahead will enhance internal accruals, all this cash can be reinvested in our growth. The second source is debt, which we will raise within our defined leverage policy of 2.5 times net debt to EBITDA. Over the last 5 years, our credit rating has improved from AA to AAA. This is a strong testament to our ability to raise capital and also invest for growth, but also to repay the capital borrowed from strong internal cash flow generation from our investments. We have accessed multi-currency markets, whether it be dollars, euros, or Indian rupees. Each time we have significantly reduced our interest costs, with the latest one being the 6.65% Indian rupee NCD bond that would be cheaper than the last 1.8% euro bond fully converted, which we had raised in 2017. Even in the last few months, we have raised over USD 500 million and showcased the support and confidence of our financial partners even in these trying times. We are grateful to them all. Our growing EBITDA will further provide advantages from both a credit profile as well as our ability to raise more capital. We're also living in a low interest rate era that should augur well for us. Finally, with the entire Motherson Group coming under one portfolio, we are open to raise funds by issuing more equity, but only if required. We love our equity and we will only do so for very compelling reasons.
This completes our presentation. Before we go to the Q&A, let's look at part 5 of 25 for 25, which is about increasing content per OEM and how the chakra is an everlasting upward spiral that will take Motherson to 2025 and beyond.
Chapter 5, Content Increase.
That's exactly what we want to do with the new verticals in the next 5-year plan.
So the principle of increasing the content of the car is providing solutions, understanding the problems of the customers, the challenges they are having, following the market requirement and so on. That means you can bring more product and you can sell more, and automatically you are increasing your share. Yeah? We do cockpit, we do exterior mirrors, interior mirrors, modulars and polymer products, IP, bumpers, door trims, injection molded component. Our DNA in the group is always to improve ourselves. And automatically, you will never look what others are doing. That means we'll look what our customers need. Bumpers, spoilers, roof bars, and shock absorbers, sheet metal parts. We're doing high precision metal component, aluminum die-casted parts, HVACs. And this is what makes Motherson unique, that we are able to provide the solutions for all product lines. And we have all possibilities in the group to develop it and to do it. And with our Motherson global presence, I think we are very well positioned, to win more and more with our customers. Vision, interior and exterior. I don't know. A mirror.
We also do condensers, we do HVACs, we do air conditioners, you name it, we do it.
My name is Vishal Kabadi. I head the joint venture that Motherson has with Magneti Marelli, mainly making lighting components. I'm now 41 years young and I've been with Motherson for around 20 years. I'd say I'm a global citizen with being an Indian at heart. So growth as an HR strategy in Motherson is very simple. It's our job to continue to have the growth in the companies. The company will give the first opportunity to grow to the people who have stayed with the group or the company. In the case of Magneti Marelli Motherson, we've grown 4x in the last 5 years. And all the unit heads and department heads that you will see in our company have been with us for more than 10 years. They joined as simple engineers who are now today heading their own departments. And it helps in the overall well-being, overall development of the character of the person. That, according to me, is the best way for growth as an HR strategy. Lata?
Hi, Vishal. I'm Lata Unikrishnan, and I'm here in Motherson since last 30 years. And I head Chairman Office South Asia as Human Resources Manager. So the growth as an HR strategy, what I feel is as the company grows, the people grow, and the people grow, the company grows. It's like a vicious circle which goes on and on. Motherson is the company for those people who want to experiment actually, and who have the imagination. Einstein says that knowledge will take you from A to B, and imagination will take you everywhere. If they want to grow with us, they are the people who can go a long way. We always say that we're very ordinary people delivering extraordinary results always. So that makes a great company to work for. Hi, Frank.
Thanks. Yeah, my name is Frank Sovis. I'm the president of PKC North America. About 4 years ago, Motherson acquired the PKC group and rolled into the organization that way. What struck me about the acquisition process with Motherson, how right out of the gate, they treated us like family. The company's Motherson, but I feel a personal connection to the business I run. I feel like I'm an entrepreneur of my own business. That's a very unique, exciting environment to be part of. The principle from Motherson of, whatever happens, the world will not come to an end is really driven by a focus on the future and staying the course to the plan. Don't get distracted by the day-to-day events. If you stay the course, you'll ultimately be successful. The principle of adaptability and being focused on the future, you see it here today in the Motor City, Detroit, the foundation of the auto industry in so many ways, right? 10 years ago, it was filing for bankruptcy. Today, it's a great example of a vibrant city, the investment in the electronic vehicles and the next generation of what a vehicle will be. They've turned around the persona. You see it in the auto industry, and you see it in the city of Detroit. There's a saying, and I think it's true, that says coal under pressure creates a diamond. If you're going through a crisis and you can continue to allow your people to move forward, and I think that the Motherson culture promotes that. Rajat?
My name is Rajat Jain. I am the COO for SMR. I have been with the company since 1999. So I finished 20 years last year. I got a watch after 10 years, yeah. And nothing since then. So the concept of pivot is use your current capabilities and strengths and then leveraging them in new areas and to explore new opportunities to create value. If you look at things with a new perspective, you'll be amazed at the outcomes that you can achieve. We believe that our ability to respond to change is extremely important for longevity. We have, of course, the example in SMR Australia. When the automotive industry decided to leave the country, we were faced with a similar situation to decide whether we would like to wind down the operations in Australia or to pivot. That is when we sat down with the teams and looked at our strengths and capabilities using our design and manufacturing competence and developed some very interesting products for healthcare segment. The other segment that we focused upon was electronics devices. Within a relatively short period of time in Australia, we could position ourselves as a manufacturer of new technology devices outside of automotive. We believed that we have the ability to redefine ourselves, to pivot. And the result is that we have a sustainable business, tapping into new markets, getting into new product categories, delivering strong profits and a ROAS of well over 60%. And this really helped us to maintain the workforce. And of course, as a family, we were all very happy that we could keep this business sustainable.
दिखाइए 3,000 तो बहुत ज्यादा है
सर कम कर देंगे 2000
2000 नहीं 2000 भी बहुत ज्यादा है इस घड़ी के लिए
चलो सर 1000
दूं चलेगा चलो सर ये लो थैंक यू सर Rajat said he didn't get anything for 20 years. He's going to get this now.
Best part is that as we have grown, our people have grown. And as we now pivot and grow, the people will grow together with us even more.
Yeah, I agree. I think the whole thing is all about the company growth. That growth is amazing. Is something like this river, endless. Just keeps on going, doesn't stop.
Thank you all for your kind attention.
Oh, wow. Thank you, sirs. We will now be open for a quick Q&A session. From the Motherson side, we have our chairman, Mr. Vivek Chand Saigal, our vice chairman, Mr. Laksh Vaman Saigal, the COO of Muscle, Mr. Pankaj Mittal, the CFO of Muscle, Mr. G.N. Gaba, and the Group Strategy and M&A Head, Mr. Kunal Manani. If you have a question, please raise your hand on the Zoom platform now. While we wait for the queue to build up, I would like to remind everyone today's presentation will be available on our website after this session. Once called upon, I request you to please unmute yourself, introduce yourself, and then go ahead with your question. To start off, we have a question from Mr. Jay Kale.
Yeah, thanks for taking my question, and really thanks for this impressive presentation. So my first question was regarding your 2025 strategy on the non-auto side. You seem to have quite an aggressive plan of 25% non-auto revenue contribution. Now, just wanted to understand how would that strategy of inorganic growth over there be? In the auto side, you did mention that till now you have the kind of customers coming and telling you to acquire, and that has also been backed by your impressive track record in the automotive side for close to 4 decades. Going into the non-auto side, currently you may not have that kind of expertise as of now, what you've acquired for the automotive segment. So how different would the strategy in your non-auto for inorganic expansion be? Would it be actively led acquisitions, or it would still follow a customer-led acquisition?
Thanks, Jay. I think what's important is that we in Motherson have always set high targets, shoot for the moon, shoot for the stars. We are very sure that in today's day, and this especially with the COVID-19 things like that, medical devices and focused medical devices are going to play a very, very important role coming up in future. We believe that the opportunity size is huge. You will come to know about it tomorrow in the presentation. And if you look at that number and then you look at our target size, you'd probably say, yeah, it's reasonable. Remember, the 9 billion that you keep talking about is actually 4 different divisions totaling up to 9. And yes, over there also, we will be working very closely with some of the world's best companies, which are huge companies. And the kind of numbers that we are talking about in millions and hundreds of millions of billions, will lead to some huge orders, which is coming to Motherson. Vaman, would you want to add something here or leave it tomorrow for the medical guys?
Yeah, I think you will see that in tomorrow's presentation, not just the medical, every division will present. I think it's also important for you to understand in the last 5 years, we were doing a lot of the groundwork, seeding these things so that we be prepared for this 5-year plan. So the teams are experienced. We are already talking to the customers. We are already hearing back from them where they want us to play. So we will follow the same strategy as we have, and we will be patient. We will not go for just for the top line, like we have said in the presentation. We will wait for the right opportunity. And we believe that in this 5-year periods, we will get plenty of windows to go after that.
Also, Vaman, don't you think that our reputation in the automotive side is going to help us phenomenally in the medical side and other areas as well? So I think being an OEM-focused manufacturer will go a long way to giving us support in the new areas where we want to be.
Sure. Thanks. And just one more question, if I may. In terms of, we saw the gallery, quite an impressive product portfolio across, the spectrum. So just if you could just give some idea that hypothetically, if you were to have all of these products, going into a vehicle, say any premium or a mass manufacturer vehicle, what would be the kind of value or content per vehicle you could cover with the current product portfolio? And what is the kind of outlook in the next 5 years, how that could move or improve or increase?
Good question. I think what is important for you to understand is that even in the biggest car that we supply today, all the components put together I think probably would be Audi A4 or something like that. The content per car does not exceed 3.5% approximately. And I think with the 27 billion that we're looking at in 2025, we still wouldn't cross 5 to 6%, I think. Because, as we said, we're going to go into newer territories and newer customers also. So, yeah, approximately something like that, we can do that. And we feel that at this particular moment, we are not in that danger zone at all. So, we have a lot of headroom in increasing content per car. Pankaj, do you want to add something to that?
That's fine, sir. That's exactly the point that there is so much of opportunity available as of now that, as Jay was asking, that we have so many different cars with different kinds of products are getting spec'd in over a period of time, and the premierization which is happening. So, as you rightly said, it's not going to go beyond that 4-5% level.
Yeah. And also, I think the value is going up. The people forget that it's not a bag of cement. It's, the premiumization of even the smaller cars is increasing, and that increases the value. And 27 billion is a value. It's not a number.
Thanks and all the best, and look forward to your
Thanks, Jay.
presentation.
Thank you, sirs. Up next, we have a question from Binay Singh. Binay, please unmute yourself, introduce yourself, and go ahead.
Hi, team. Thanks for the opportunity. A very impressive and very detailed presentation. It was good to see various professional managers across divisions in Motherson. My question is on the revenue top line that you've guided for. Could you share a little bit more about if you have to pick out 2-3 key growth areas on the automotive side? Like we are talking about 10 billion going to 27 billion or so. What will be the top 2-3 growth areas that you are assuming in that? And secondly, what is the underlying industry growth that you're assuming? Because that also to an extent has some bearing on that.
I think we said a lot in the movies that we had shown in Varman's presentation, but I think look at it this way: we are approximately about trebling our top line in the coming 5 years, and that's not going to be very difficult. Again, the premiumization of the car or the level up of the cars time and again is something which adds to tremendous value. All I can say is that, as the norms and everything will get tougher and tougher, the wiring harness value will go up maybe 20, 25%, 30% just by the upgradation on the kind of value content that goes in, because that many more sensors, that many more leaders and radars, and I don't know what all is going to be added on over there. And I'm grateful. The more complicated you make it, the more our value goes up. So that's there. The same thing is happening in the interiors and exteriors of the cars also, because you need place to put all these sensors and things like that, and that is a great value play for Motherson. I think the point of where we are going to do the acquisition and all that, I would leave it to my customers, and definitely you will come to know about it very, very quickly. So really, I don't see that as a big challenge anyway.
And also just, linking it to the earlier question, is it fair to assume that you're not assuming a very aggressive underlying car growth, right, in your assumption of the automotive growth? Because you're saying that the content itself almost can double. So in that sense, this entire revenue growth is largely coming out of the 1 to 3 points that you said, rather than the market doing anything exceptional.
Definitely, we don't second guess our customer. Whatever volumes we have at the moment, that's the basis on which all our companies have then, from bottoms up, they have actually worked on the numbers. And we are also taking into account some new products that are coming in, some new directions, some, when you talk about electrification, you talk about all these particular things, there is some value add that's there. So I think every company, every division which is going to make its presentations tomorrow will show you that. We have worked on the numbers which have been provided by IHS. So we have not moved. Kunal, Gava, can you help me over there? I don't think we have increased the numbers or decreased the numbers anywhere, isn't it?
Yes, sir. We have taken that as the starting point.
IHS is the basis, isn't it?
That's right. And as you rightly said, Binay, from our perspective, value is really the meat point, and that's where our content goes in. So volumes are what they are, but one electric car is not the same cost as a one gasoline car, though volume is exactly the same. I think that's the point Mr. Sehgal was making.
Right. Thanks, Kunal. Thanks, Gava.
Thanks for the opportunity.
Thank you, sirs. Up next, we have Kapil Singh. Kapil, please unmute yourself and go ahead.
Hi, sir. Thanks for the presentation. Firstly, I'll say that the video was really great. Truly embodies the spirit of Motherson. Probably a place where there's a lot of hard work involved, but still you guys have a lot of fun. So congratulations for that. The journey also shows a great combination of ability to take risks and track record of success over the years. Both are truly outstanding. What I want to understand is, how do you guys evaluate risks? What is, because invariably things go wrong, right? And you have to fight back many times. So what is the risk evaluation process that you use? Also for acquisitions, if you can talk about how do you do this? Is there a matrix that you use? Just some thoughts on that.
The only matrix that we use is we don't second guess our customer. If my customer tells me do, done. I think, you have to imagine that a car is constituting almost about 35,000 components and sub-assemblies and major assemblies and whatnot. And the car makers, purchase guys are probably one of the most troubled people in the world, because anything that affects the world affects them. At this time, they need somebody whom they can rely upon, whom they can trust on. And you have to be that vessel of confidence for him. That's the whole movie that we were trying to explain to you, is trust. Trust is very important, because he knows that if he tells Motherson, they are not going to go and say, oh, now give me a price increase first and do this, do this. We're no blackmailing anybody. But if, we have gone wrong somewhere, we've done something wrong, believe me, the car makers have always come to our help and made sure that that particular thing has been corrected. And we are at status quo or something like that, which is better than, that Motherson has to withdraw from that particular thing. So, Kapil, it's a long-term relationship, which is between the supplier and the car maker. And we are grateful that they really value that particular relationship. Believe me, you're a very knowledgeable person. You know what's happening in the auto industry. One small washer or a small screw can stop your entire production line. So it's not a great place to be, but you need to have some very, very trustworthy companies. The second thing, which is very, very important for this kind of a scenario, is to know that, after fixing a problem, 5 years later, we're not going to get into the same problem again. So a lot of the private equities and things like that actually will sell out the company after 4 years, 5 years. They also come to the rescue of the car makers. So there are multiple things that we saw were niche areas where Motherson could come in and establish itself in a very good book of the OEM. And that's where we have the confidence that 2025 target is a cakewalk. It won't be a problem. I hope my answer helps.
Kapil, is that it?
Yeah. No, so one more thing. Just on the acquisition side, also, if you can just talk about, maybe Kunal can come in a little bit. How do you look at acquisitions? How do you evaluate risks over there? One of course we know ROS, but beyond that, how do you look at these? Is there a scenario building that you do? How do you look at this?
Kapil, all I can, of course, Kunal will answer this question, but I can just tell you, if you have a look at a term sheet that we do with the customer before we go ahead and buy that company, you'll really have much more confidence in an ordinary company like Motherson. Kunal, can you take that?
So, the unique, I think, nature of our acquisitions is it is not a two-party transaction, but a three-party transaction. To begin with, you're always interacting with three people in order to get a transaction done, and that's what also makes it complicated, or one in probably 20-30 is probably what we'll go through, and that's why the probability is so low. Having said so, from a pure process perspective, everything that we do, as you would have seen it in some parts of the movies as well. There are pieces of analytics that we put into place in terms of what can we bring onto the table to solve the problem. The reason why the asset came to us was because of a problem, and hence the first stage is always to see that whether we can be that solution provider for them. And that's what we really assess. Do we have the capability of actually solving the problem? And as part of that solution, whatever that we require is what we're going to go and ask the customer for, and build that into our scenario when it comes down to value. Now, obviously, as Motherson evolves and as businesses go through their own evolution paths, what we can do with a particular asset keeps on evolving and changing. And at different points in time, different things can be done, and at different points in time, different things cannot be done. So we'll have to just play it as it comes. But we do build all of those scenarios to be able to say then what's the best way in which we can solve the customer problems, get our ROCs in place, and be value accretive post acquisition while trying to be as risk free as possible at the point of acquisition itself. Again, which is driven by the customer behest nature of our acquisitions.
Kunal, also we can tell Kapil about the fact that because Motherson is not aligned to one particular customer, sometimes the companies which we are being asked to take over is only supplying to one particular customer. We can introduce that to the new customers. So there is cross-selling happening, multi-customers, multi-countries, multi-products. I mean, everything is possible. And that I think is very, very dear to our OEMs. Because look, there are only that many OEMs in the world. They're not like unlimited kind of things over there. And everything depends upon the relationship that we have with the car makers. They know that Motherson can be trusted. Look at all the things that have happened in the past 20 years. You will see there are so many things that have gone wrong in the world, and yet Motherson has been given more and more and more and bigger responsibilities time and again. So I think it's a relationship that we build on trust and performance. Our performance is no something that can be ignored by anybody. In fact, every single customer that we have taken over in the new acquisitions that we have done, within the next 3 years, we are the top end supplier when it comes to QC, DDM, SES. You name it. Even when you look at MWSI, you saw that in PKC as well. But I think the only focus, 45 years, we have focused only on automotive. Kapil, there is a huge gain that Motherson had because of its dedication to automotive.
Thank you, sir. Thank you, and really look forward to next 5 years journey.
Thank you so much, Kapil.
Thank you all. As a reminder for everyone, if you have a question, please raise your hand on the Zoom platform. To raise your hand, please click on the hand icon on the bottom center of your screen. Up next, we have Raghunandan.
Thank you, sir. Thank you very much for the detailed presentation and 25 for 25 videos. Extremely inspiring. My first question was like, given the target of 3CX10, any geographies where the focus will increase for Vision 2025? While highlighting one of the points you indicated, focus on increasing share of Japanese OEMs, and for certain entity you indicated increasing focus towards Russia. So can you elaborate on this point?
So for multiple components, Raghunandanji, we are going to go and each one of the strategies will be discussed tomorrow. But definitely we have seen that, we have knowingly kept away from USA. We have knowingly kept away from Japan. These are very mature markets. We have knowingly kept away a little bit from Korea, South Korea I'm talking about. No intentions to go to North Korea. So, okay. So we believe that, we are graduating. We have graduated from India onto Europe, onto the Americas, the lower Mexico and Brazil and all that. And then now we went to USA. Our plants in Tuscaloosa and PKC and SMR in USA are huge bags of experience that we have collected in USA. Just wait and see how we grow this particular thing in USA, and of course, hopefully Japan, hopefully Korea. So these are all developed markets, very mature markets. So I believe that the next 5-year direction has been done very, very wisely, and we have totally operated from our strengths. Nowhere will you find that Motherson is operating from our weakness.
Thank you, sir, and wishing all the best. Just one question.
Sure.
From the journey of 10 billion to 36 billion, of the incremental 26 billion, how do you see the contribution of inorganic initiatives?
Organic initiatives?
Inorganic.
Answer.
Yeah, of course, inorganic will play a large part. Like we said, the world automotive market is not going to triple up. So, we're looking for those ambitions. So we're going to look at specific niche opportunities, of course, in the automotive space. I think you also have to understand that mobility space is quite wide. So historically, we've been focused on passenger. We've penetrated, two-wheeler, commercial vehicle, earth mover equipment. There's a lot of scope to grow in all of that. It's not just Pascal. I think, light vehicle production is like you saw, more than 100 million a year. So there's a lot of scope for us to really increase. And if you then couple that with opportunities that are coming in the different verticals as well, it would also have a waterfall because, it will be synergistic. Our own companies will be able to provide supply chain solutions to the other companies that we acquire. If we take over a medical company, you'll be able to source electronic components ourselves from Motherson. So it'll be a combination effect. It'll be exponential, and definitely acquisitions will play a part in that. And we're not adverse to that. So we will wait patiently for the right one, as we always have, and we will play on our strengths, and hopefully we'll be able to achieve it.
Until then, enjoy the free cash.
Thank you, sir, and wishing all the best. I'll come back in the queue.
Kunal's team on the lighter side is working 24/7 to make those happen. So.
Thank you, everyone. Just as a reminder, if you're writing questions on the Q&A section over here, we would request you to please raise your hand so we can unmute you and you can ask a question. Up next, we have Aditya Makharia.
Hello, sir. This is Aditya from HDFC Securities.
Hi, Aditya.
It's a great presentation and a great vision. I just had two questions. with the advent of electric mobility now becoming more mainstream, do you see any of your parts which could perhaps become obsolete? And secondly, obviously, new areas which can emerge due to the spread of hybrids and EVs. And on the second side, what is your debt equity target now that you have stated to achieve this $36 billion target? Obviously, you would have to do a lot of acquisitions. So I do understand there was VisioCorp, which we did in 2009, and that was done for a song. So do you see your debt levels sustaining? I mean, is there any debt equity ratio you have in mind to achieve this target? Thanks.
Aditya, if you look at the kind of circumstances where we are today, believe me, we are in a very difficult situation globally. Not Motherson, I'm talking about a lot of the companies that may be available very, very soon. The problem is that they have got a lot of help from the governments, and they are still not sure whether they have to write it off or they will have to pay it back or what is going to happen to it. So the visibility will improve in about 2 months' time. And Kunal and Gauba, please correct me if I'm wrong. But somewhere around January, Feb, I think you will start to see some clarity coming because the governments have got the vaccine now. I think it's going to take them about 2 months to sort out that particular or 1.5 months, 2 months to sort out that scenario play out. But I think the production has not come back to 100% where it was pre-COVID. So that's going to put pressure on a lot of the balance sheets and a lot of the companies. I think in a very humble way, there are going to be a lot of companies which have to take haircuts or banks, or I don't know how the whole thing will play out. But I don't worry too much about this. I think our team is only focused on one thing, and that is to take care of our balance sheet has to be very strong. We do have this restructuring of Motherson, which is going to take place in the next 2 months, 3 months, something like that will play out. And once we have that behind us, Motherson is going to come out very, very strong from this particular thing. Gauba, Kunal, would you like to help or add?
Yes, sir. Sir, what is important is to look at the net debt to EBITDA ratio, because that actually reflects the earning capacity of the company. And Vaman sir in his slide very clearly laid down that we don't want to exceed 2.5 times net debt to EBITDA. Our comfort zone is to stay below 2, and our ratings have been very important and they have improved. I mean, leave aside the pandemic situation, which Mr. Sehgal was also trying to emphasize. But with our greenfields coming to shape, you have seen the Q2 results declared last year. So we are very confident of further improving on our net debt to EBITDA ratios and be ready for any level of growth. And I think Kunal may like to add, and there was also question on electric vehicles, which
Electric vehicle, everybody knows my views on it. It's not going to happen as fast as what you imagine it to be. We think this particular thing will take another 10, 15, 20 years to play out. If you notice the automotive movie over there, you have 1.4 billion vehicles on the road as of any time today. Now, to change that particular thing is going to be a very long process. So, your guess is going to be as good as mine. For me, I am telling my team, you focus on only one thing, and what is the customer asking you. For us, whether it's an electric engine or a diesel engine or a petrol engine or it's running on reputation, as cars run in Punjab. So that's on the lighter side. So, don't worry about that. You worry about your components, your this thing, and listen to the customer and breathe with the market.
And if I may just,
sorry.
Our current portfolio, Aditya, is powertrain agnostic. So 99.9% of our portfolio is not going to get impacted by whether a gasoline engine is sold or an electric engine is sold, and hence none of our product lines actually face any obsolescence risks in the next 5-year plan at all. In fact, all the trends actually support our existing product lines, whether it's electrification, which enhances wiring harness, which also means light weighting of vehicles, which means again more polymers, etc. Hot stamping again coming in, and so on. So all that is actually more positive than negative for the portfolio that we have.
It's probably 90% positive and maybe 10% negative, maybe.
Aditya, does that answer your question? Up next, we have Hitesh.
Absolutely.
Up next, we have Hitesh Goel.
Hello. Hi, this is Hitesh Goel from Kotak Institutional Equities. Thanks a lot for insightful presentation. I'm quite intrigued with the 5-year outlook and the ambitious targets that Motherson has. What I wanted to understand is that you have shared 2-3 things in your 5-year outlook. One is the revenue target, second is the ROS of 40%, and third thing is that no division can be more than 10% of revenues. So if I look at the current mix, right, I mean, we understand that large part of this would be acquisitions. Wiring harness is a large part of your revenue right now. And for it to be only 10% of revenues by CY25, the growth in this vertical doesn't look looks to be very low as compared to the overall target. So similarly for mirrors, like it's 20% of your revenues around. So can you explain what will be strategy? How will you achieve this 10%, less than 10%? It's not a hard fast target for you, and you look at the organic opportunities accordingly. And my second question is that your ROS target, we have seen that once you do an acquisition, and Mr. Sehgal has already said global situation is very fragile right now. Many companies have very bad balance sheets, and you acquire companies at very low prices, which are mostly in a stage in a very weak balance sheet stage, right? So it takes time to turn around. We've seen that with companies with you as well as globally. So most of the acquisitions could be front loaded. Is my assumption right? And how will you achieve, because internal accruals will take time to catch up, right? So how do we balance this to achieve that kind of growth?
I think what is important is that you want your view is quite fixed. The more the problem with the companies, the suppliers for the automakers, the more malleable they are to actually give you a better price, a better this thing, and so much better. So look at it, when we took over Visiocorp in 2008-9, at that particular time, I had said in a previous question that somebody asked, I had said that, if you read the term sheet in which we signed with the customer, do you know at that time with the Lehman crisis, there was a lot of problems on the banking and everything and all that. Our invoice would leave our factory and our money was in our bank. So those kind of conditions come in at that time, because for them, supply chain is very, very important. So it's not a matter of one component, it's only costing about 100 rupees or 1,000 rupees or $100 or whatever. It stops the entire production of the car. And once that happens, it's not just 100 rupees which is getting stopped, it's a car which is going to cost you 20 lakhs or 30 lakhs, that's going to get stopped. So there is no kind of a methodology that you can measure the impact of a particular component. At that time, the customer will say, look, Chand, I don't care, I need my supplies. You go in, you run that plant, whatever you have to do, just make sure that my plant is not stopped. So those kind of situation is very unfortunate, but it happens. SMR, as everybody knows, we were actually paid to take over that company. So, don't underestimate the negotiations. And I told you that, when we do this, when we sign the term sheet, sometimes it's very, very unbelievable that the car maker needs that so that his production can go on. So today's situation is very much similar to that. This is not a financial this thing too much, but it is a person, it's human beings that are getting affected. And so, I wouldn't rule it out if you are thinking that, there's going to be a very 1+1, 2 kind of a thing. It's not going to be like that. It's very open. And we are seeing it in the smaller and medium acquisitions that we are doing the M&A at the moment. You can really.
Yeah, so let me add to
Yeah,
that.
sure.
Like, if you think about that, it's a direction that we want to go in. So when we did the mirror company acquisition, the mirror was a fraction of our business, and that one acquisition became 50% of our business because we doubled the group's turnover, but only for that point in time. Then the next 5 years, we worked on going after other opportunities, which brought that down while growing it as well. So yes, maybe at one point in 2022 or 23, wire harness may be 30%, 40%, because a big acquisition came that made sense for us to do. But then we will work on the other divisions to find them a bigger acquisition. So it's a constant rolling ball. It's not that if we do this acquisition, wire harness will go over 10%, so we can't do it. No, absolutely not. We get an order, we get a geography, we will go for growth, and then figure out how to minimize it by growing the rest of the stuff even faster. So it's never a threat for us that, something's gone over 10%, let's stop growing it. Absolutely not. If there's a great opportunity, we will 100% go for it. Yet we'll put the pressure on the rest of the teams to further grow so that they can catch up and bring it back into below 10%.
But also, Vaman, if God forbid those other divisions are not in a position to do so immediately for whatever reasons, we are not going to jump off the building or something. It's okay. Next 5-year plan will again attack it. So it's life. It's unpredictable. So but these are general guidelines that we give to our divisions to support them. But who knows what's going to come out tomorrow? I mean, nowadays we are seeing so many things that are happening. I don't know where we are going to be in 2025, what products we are going to be making. But one thing I would like to put in your all of yours, your team of people that you're there. We have the wherewithal of basic infrastructure to do what we want. We have 32 design centers. We have 7 tool rooms to die for. We are, you name it, every single aspect of manufacturing, our teams have become very, very proficient and very good in that. So it is an open thing for us to go anywhere we want to. We are not restricted by anything. Generally, we give this particular guideline to our people. Okay, don't get into, let's say, for example, power projects, because really, honestly, we don't have anything to do over there. We can't really contribute over there. So whatever is core manufacturing, whether it is for cars or it's for planes or it's for trains or anything, we are there. We can do it. We are very, very flexible.
And there was one more part to the question in terms of front-ending of acquisitions.
That's yours.
Is there a desire for front-ending? Again, we don't desire from an acquisition perspective, as we've always said. It's at the behest of the customer. But if I were to see, there are 3 things getting lined up which augur well for it. Number one, when you think from our own free cash flow perspective, our capex cycle's behind us, and hence, with the stabilization of the greenfields now, we should be seeing decent amount of cash flows come out, which provides the headroom for doing acquisitions as well. 2, when you look from an industry perspective, you will see that there does seem to be some pain that is there in the industry As the COVID environment clears out, there would be some winners and losers, and there will be problems which customers will want players to solve for, like ourselves, and that should again throw us opportunities in the near future. And finally, when you think from our restructuring perspective, on a post-reorg scenario, we would have a much wider product portfolio with which we could go and get a wider set of acquisitions to look at, which should all augur well towards front ending of acquisitions, as using your words. So yes, things do seem to be getting lined up for that scenario.
Hitesh, does that answer your question? Up next, we have Carlos Botello. Carlos, please unmute yourself, introduce yourself, and then go ahead with your question.
Good afternoon. Carlos Botello with Lemur Capital. Thanks for the session. My question is regarding the corporate reorganization. First of all, congratulations on bringing together the two parts of the group. I think it's an excellent move that I think has been much weighted by investors. I guess first part of the question is why now? What pieces have come together to allow it to happen now as opposed to 5 years ago or 10 years ago? And then also, could you tell us a little bit how you went about figuring out the relative valuation of the two parts of the group?
Well, I think it's a very difficult thing in the Indian tax system to make it happen. It was a complicated thing. We have been growing constantly, and it was very difficult to time it to perfection. It just so happened that we came across this particular idea from some of the banks, and the banks could actually show us that it could be done. And then we talked with Sumitomo. Sumitomo said, yes, this meets my expectation. And then we put the whole thing together and gave it to them. On the valuations, I would leave it to Kunal and Goba if they can answer this question better than me. But go ahead, Kunal.
Yeah, so Carlos, the valuations done by PwC and KPMG. The fairness opinion on the valuations been provided by Bank of America and Axis Bank for MSSL, and by Kotak Bank for SAMIL board. It's done as per the generally accepted practices. The valuation report is in the public domain, so you could have a look at it and see what methods that they have used and how they've gone about doing it. But in a more generalistic way, if I were to put it, the reality is that 90% plus of the business is similar between SAMIL and MSSL. Considering a large portion of SAMIL's valuation is driven by MSSL's by its holding in MSSL and the 49% it holds in SMRP BV. And hence, whichever is the sum of parts you want to consider, the final output does not change much, and hence, was relatively simpler. I would urge you to look at the investor presentation as well, which was released on July 3rd, if I remember right. And the second last or third last page of that presentation shows you how also the computation can be done by anyone who may have a different sum of parts to it as well. So you could look at that. You could look at the valuation report, which is now in the public domain, and we'll be happy to address it in case you have any specific questions around it.
Thank you.
Welcome.
Thank you, everyone. Up next, we have Jinesh Gandhi. Jinesh, please unmute yourself and go ahead.
Hi, sir. Congrats on Vision 2025. My question is the first clarification. When we say 10 billion for 2020 and 36 for 2025, this is excluding DWH, right?
Sorry, I didn't get it.
The billion number is excluding DWH?
No, it's including, isn't it? Yeah.
It's a group number.
It's a group number.
It's a group number. Okay. Secondly, like last time, would you be able to share what would be the inorganic contribution to this, so we can, as a analyst community, we can monitor the organic development on that front?
Sorry, I couldn't hear exactly what you were saying. Gauba, did you hear it?
Would you be able to share inorganic contribution to this $36 billion target?
Share of inorganic contribution to this 26 billion target. So, again, I think you will see a lot of that in the presentations tomorrow. There is a large chunk that is coming from inorganic contributions, and it's again from all the companies that have done it bottoms up into seeing what are their growth aspirations, and then couple that with acquisition aspirations. So this question will be better answered as you go through all the divisional presentations. You will see their aspirations for organic and inorganic, and then if you're still not satisfied, we can take this question again tomorrow evening post the divisional presentations.
Jinesh, if you remember, every 5 years, what we do is our marketing people go to the customer and they then work together with them, because we have to plan the capacity, we have to plan a lot of things. The customer then tells us a ballpark number, which is pretty accurate actually, but they tell us that in 5 years, this is what's going to happen. And with that, we assume what business is going to come to us, what's our market share or whatever is that in that customer or something. They build it up from bottoms up. Then they all have their aspiration target of acquisitions and all that. So that's on every division also. The new divisions also do that. And then totally that whole number put together is what we call 36 billion. Now, there is no other rocket science behind it. It's a very simple way to do it. But trust me, in the last 25 years, other than the COVID situation, we have pretty much anticipated almost everything. And we are pretty close to our targets every 5 years. I hope this helps.
Sure. And lastly, with respect to the non-auto part, when we initially talked about it 5 years back, we also had talked about defense. So is defense now merged into aerospace? Should that be the way we look at it?
So we are not directly into going to go into defense, but our customers, for example, the CV vehicle manufacturers, they are supplying to defense. So for us, it's a component part that we supply to them. And we are more interested in the aerospace side of it and the security side of it. But if the opportunity comes later, we'll look at it that time.
Sure. Great. Thanks and all the best.
You're welcome, Dinesh.
Thank you, everyone. As a reminder, if you have a question or a doubt, please raise your hand on the Zoom platform at this time. Up next, we have Nishant Vas. Nishant, please unmute yourself and go ahead.
Yeah, hi sir. Thank you for the opportunity, and it was a beautiful presentation to get a snapshot of a company of dreamers, and I'm sure this is a great primer for any new company joining your organization. So my three questions are first on existing businesses. I was sifting through your products. You mentioned very clearly spelled out a couple of things, and I think Vaman can put some light on this. On the wireless charging business, you called that out quite extensively. I think if I understand correctly, it's from your Ossia joint venture. Is that the Kota technology that you're probably going to use aggressively? So if you can shed some light in terms of what are your thoughts around the potential opportunity, because this is a big technology adoption cycle. We are seeing wireless technology being adopted quite significantly. So if you shed some light there. And B, also, this is a regular question, camera monitoring systems, and you again called out it quite aggressively. So how do you see that in terms of adoption cycles? And is that going to be a big theme in the next 5 years? I will stop at that if you can answer those questions first.
Okay, thanks. So for the wireless technology, we've made significant progress. I think one thing that you have to understand is that these all have to be regulation approved. So they got the first approval from the US for use of quota technology up to 2 meters. So we are quite excited about that. I think that will allow us to slowly start to introduce this technology. However, the gigahertz that are required to charge bigger devices such as mobile phones, etc., more effectively, those kind of approvals are still in the system. These are breakthrough technologies which take time. We don't see it playing a huge part again in the next few years, but definitely by the end of this 5-year period, we hope that it will become a part of offerings in the car. As you have to understand, automotive testing also takes a few years. There's crash testing, there's safety testing. There's a lot of stuff that really goes on, and we're well on that path. We don't see it replacing wire harness or anything like that. These are again very low voltage charging for things like your phones, etc., which should right now need cables in the car or small lights in the interiors. That's where we are really focusing on right now. So it's still some while away. We're also making progress in other charging solutions because, as you know, we play in the interiors. So we're looking at other collaborations where we can bring faster charging technologies that may not be Wi-Fi charging, but wireless charging as we continue to build our capability in that space and use our products, the doors, center console, the dashboard. These are all prime places for wireless or charging to happen. So it's quite exciting, and we are building our competencies in that and working with the relevant companies for doing that.
All the prime real estate is with Motherson, isn't it? In the interiors. I mean, think about it: the whole cockpit or the control, the instrument panel, the doors, the center console, and all that. These are all prime real estate in a car. And by Motherson, we walk right into it, and a lot of advantages that we can give to the customers.
And we are building a lot more like partnerships like that. I mean, there again, these are things that can possibly completely change the way these products are being offered in the current market. So these are breakthrough technologies. They take time. This is not something that happens overnight, but we are making steady progress.
But I would be a bit careful if you're thinking that wiring, Wi-Fi thing is going to be transmitting electricity. I'd be scared walking out, but anyway, if you say so, I'm okay with that.
That's still very, very far away. To talk about camera systems, we had believed that camera systems will have a much faster take, but right now we're still seeing less than 1% that's really coming as a complete camera replacement. Of course, integration of mirrors with cameras are happening at a good pace, and we are doing that. And we've also been selected on platforms that we had mentioned on the calls before, not only for PASCAR, again, a very, very small volume, also in commercial vehicle where it's that much more relevant because the required field of sight is a lot more, much higher blind spots. So we believe that cameras will be used a lot more effectively over there. But still, as a percentage of overall RFQs that we are seeing as a complete camera replacement is less than 1%. So very low take, but the integration of mirrors with cameras are seeing a steady increase, and we're quite excited by that, and we want to continue to increase our integration in that as well.
If I had a clarification, so RFQs with cameras, how much would that be as per you?
So that's growing at a healthy clip. I don't know exactly the top of my head, but the content per car is significantly increasing in electronics in the mirror in general. So as you can see, when we took over the mirror business in 2009, it was 500 million. Now it's more than triple of that. So definitely the car market hasn't grown that much, but the content in those mirrors in terms of electronics, power folds, actuators, the different types of glass that we are using, all that is increasing. So it's not just a function of the camera, it's actually a complete function of that mirror system, which has now become pretty much like a module and is growing in content.
Yeah, but we have to make up our mind. The electric car is going to cost a lot. Now, if the transition is going to happen towards electric car, then every single add-on is going to increase the price even more. So, the car makers are kind of split on that. They will evaluate where the value or what the customer wants. So, I think camera systems will come, but it will come more as an option for you to choose rather than a pre-fitted by the.
And tomorrow you will see in the vision systems vertical, they will go a lot more detail into how the content is increasing. So you will get a good idea as how that business will continue to grow as well.
And if I may ask a question on wiring harness to Pankaj sir, you called out for the first time electrification and connected electrification in a big way in your presentation. So, how and just first of all, is this going to be led by more like a PKC division vertical from that high voltage transmission products, or you think that will also fructify in India in a meaningful way? And also, if you could give some sense in terms of how you see the value transition between say a heavy truck which was electric vis-a-vis traditional ICE diesel engine, if you have any thoughts on that.
See, what we have tried to showcase is that what is the trend? What are the trends which are happening? We're not guessing as to how much of it will fructify in the next 5 years, but the whole idea is that we are future ready. Whatever the requirements of the customers are and whatever new developments they are doing, we are partnering with them. So whether it's a two-wheeler electrification of premium vehicle makers or two-wheeler makers or trucks or buses, in every place we are there and we are supporting them. And it's not limited to one geography. But coming to the truck side and the buses side, like in Europe, we learned a lot because this whole electrification in PKC came in even from the rolling stock side, because rolling stock had been doing high voltage business for the railways. That's a rolling stock business. And from there, it was a natural thing, a lot of learning which got into the trucks and the buses side as well. So it's not limited to any geography. We will be doing it. We have a center of excellence and we are working with all segments.
Thanks so much. And very small, quick question I'll squeeze in is on the new business verticals. So obviously, it's purely coincidence that your business vertical that you are new targeting on medical devices and specifically aerospace and electronics in general is also getting support from the government in the form of PLI scheme. So, from a production standpoint, do you think India would be a good starting point on these segments, or do you think no, it will be as opportunistic in any globally any segment, any place? So, just your thoughts on that.
Pankaj, go ahead and answer, but this thing is very clear. Whoever gives me the order, I'll follow that guy. We are Punjabis, and Punjabis, it's very easy to decide which came first, chicken or egg. It depends upon what you want to order. If you order chicken, chicken will come. If you order egg, egg will come. So, but Pankaj, we are not moving on that towards a government in fact, we are very averse to taking help from the government for something or the other, unless there is a huge need over there. So anywhere in the world, we try to stand on our own feet, and we leave it to the customers to tell us what they want, and that's what we do. But Pankaj, is there anything that I missed on this?
No, absolutely, sir. We look not only from a short-term point of view, but all our facilities have always been set up on a long-term vision, that which is the best location for supporting a customer. So in terms of the supply chain effectiveness and from a cost perspective, so we look at all the issues and not only look at grants or something which is short-term thinking, because it may be there for 2 years, 3 years, and then you are not making that thing very effective. So we have always went ahead with mid to long-term thinking.
How long ago did we go to Sri Lanka to set up the wire plant? 12 years? 11 years?
Even more than that.
2002, sir. That was
okay, so 18 years.
18 years.
So just to give you an example, first time they made a A5, A3 for setting up a plant in Sri Lanka because we wanted to supply to Chennai. And the guys came back and said, sir, we will produce there for 4 years and then we'll shut the plant down and shift the machines to India. I said, no, go back. Show me a plan how 20 years later you will still be supplying from Sri Lanka and it's going to be cost effective. And believe me, today, the plants that are there in Sri Lanka, you can see it, are one of the most capable plants that were there. They're all running very fine and increasing the capacities. So we don't do anything short term. That's not our style.
Thank you so much, sir, and all the best.
Thanks.
Thank you, sirs. For everyone here, we would also like to remind you of the virtual showroom where you can visit and get a good detailed look at some of the parts we are supplying. Access to this showroom is through the same webpage you have used to join this conference. It will be available for you for today and tomorrow. Up next, we have a question from Preeti RS. Preeti, please go ahead.
Hi, thanks for the opportunity. I think it was a very unique corporate presentation while it showcased Motherson as a truly homegrown global company, keeping the values of one family intact. So, in the presentation, we made a point we do not want to bet on a particular technology. So far, I think Kunal also reiterated that our product propositions currently are truly part agnostic and are in fact getting enhanced in this whole case disruption that automotive industry is witnessing. So, but when we think of an ICE engine car or be it a EV, I think 35% in case of a ICE car or nearly 60 to 70% of a EV comes in from a battery. So, your thoughts on will we consciously stay away from this product segments when we think of M&A? Or we are open to it if a customer backs us, or we do see a potential for 40% growth.
Absolutely, you're right. We have not been asked in the last 18 years by any customer to look at anything which has to do with an EV car or with any of this thing and all that. So, the point is we are pretty tied up in trying to satisfy our customers in the different geographies. So when we start taking bets and we start taking sides, then we get into big trouble. But I kept asking myself as to why is it that in the last 15, 17 years, we have never been offered even one company. There are hundreds and hundreds of thousands of billions of dollars have been spent on EVs and batteries and all the wonderful things that you're talking about. There are so many startups and they die every day. As they are born, they're dying also. But not one customer in the world has asked us to look at anything to do with batteries or things like that. Yeah, I mean, a lot of banks come to us and tell us, "Oh, sir, this is a great project. Invest in the batteries." And we say, "No, we'd rather have a customer telling us to do that rather than a bank." And that's the reason why we have not gone there. But we are absolutely not averse to anything. Whatever the customer will tell us, we will do that. We would take great pride to get into batteries or whatever if the customer asks us. But the bet portion is, when we start to drive our brains as to what is the next level. We are very sure this life, this birth will take care of what the customer wants. Maybe Vaman in the next 5 to 10 years might take a bet. That's his call, but not me. I'm still old school.
Thanks, sir. That was my question. Thank you.
Thank you, Ida.
Thank you, sirs. And thank you everyone for your questions. If anyone else has a question for today, please raise your hand on the Zoom platform now. Looks like we are done for the day for the questions. We would now request our chairman and vice chairman for today's closing remarks.
Thanks, Akshay. I think today was a bit, opened up what we are doing and how we have reached where we have. We've tried to put everything in a little bit of a fun format so that people could understand it, otherwise it would have become very boring and this thing. So thank you very much for your patience to be with us in this very important day for us. And I would really recommend that all of you come in the morning tomorrow. I think, Akshay, it's 11:30, isn't it?
That's right, sir.
And 11:30, and then you will really see every group making their presentation. And again, we will be there with you in the afternoon and evening to answer any of your questions on that. And also the teams will be there. Every presentation will have a Q&A session so that you could ask that. And if there's anything from the entrepreneur side, then Vaman and me will definitely try to address that for you. So thank you all very much. Very grateful for all of you with the patience to see the film and also ask us the questions. Thank you very much. Have a great day.
Thank you. See you tomorrow.
See you tomorrow.
Thank you.
Thank you, sir. So once again, tomorrow the presentation will start at 11:30 a.m. IST. See you then.